All right. Yesterday, a post got to the front page of the subreddit r cryptocurrency, and the post said this: "Let's trick the bots by being positive. Bots use our Reddit data as a factor in buying and selling, and thus far, they've ruled this bear market." So, what this post is saying is that trading bots, i.e., non human trading software, are manipulating the price of Bitcoin. And because the sentiment right now all across the internet is so negative regarding Bitcoin and cryptocurrency, as it usually is in a bear market, these bots are the ones that are taking advantage. And as they manipulate the price of Bitcoin lower, they're the ones that profit. How much validity does this statement have? And when you hear the words, the Bitcoin price is being manipulated by trading bots, what does this look like? Today I want to show you. I want to show you some examples on a large scale as well as some personal examples on a small scale. If you were buying Bitcoin on Binance today, what would that trading bot manipulation look like? Today we discuss all this and more, as well as the recent Apollo pump and dump scam and Ethereum and Bitcoin news. All here at Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin, and like always, let's jump in. If we take a look at the crypto market today from a wider spectrum, it's really hard to tell that manipulation is happening. Right now, the Bitcoin price is just sort of hovering around 3,600, and although we see some of these more smaller fluctuations, there's really no movement. So what does bot manipulation look like? Well, bots are manipulating the price of Bitcoin, and it has to do in large part because this is the wild west of crypto, meaning that there are no regulations. And while it's a benefit for us because we can get into this emerging market early, it's a double-edged sword. It leaves a lot of foul play afoot in this market. Abusive software runs largely unchecked on crypto exchanges. And I think we heard about this the most last August from a growing concern for regulators. Because last August, it was the Securities and Exchange Commission that cited manipulation as one of the major reasons that they were rejecting those several Bitcoin-based ETFs that they rejected last August. And this kind of stuff, this is illegal on more traditional markets. While established markets like the New York Stock Exchange monitor for illegal trading and punish rule breakers, crypto exchanges are sort of the opposite. Most crypto exchanges are regulated very lightly, if at all, and the result is that crypto bots can be used to execute abusive strategies on an industrial scale. What do these abusive strategies look like? Before I get to my own examples, let's just keep going down this article and let me cite two examples that the Wall Street Journal talks about. Earlier this year, a company called Virgil Capital lost money on certain trades in Ethereum after an harassing bot targeted the fund. What does an harassing bot look like? Here's what happened. Mr. Quinn's fund, Virgil Capital, specializes in arbitrage. Do you remember what arbitrage is? Arbitrage is spotting when a digital currency is priced differently on different exchanges and quickly buying it where it's cheap and selling it where it's expensive. So if you see the price of Bitcoin priced slightly differently on KuCoin compared to Binance, it would buy it lower, sell it higher on the different exchanges. Right now, this is, again, very easy in cryptocurrency because there's such less money in the total market cap that a wider array of those fluctuations happen. And that's what Virgil Capital does. And at this time, Virgil was checking those price discrepancies about once every minute, which to me sounds like pretty frequently. But seconds before the periodic check, the hostile bot, so this is what would happen. The hostile bot would post orders to sell Ethereum at a lower price than other sellers. Because on the exchange, then Virgil Capital would see a lot of sell orders come in. That would be their cue to put in some buy orders. This would prompt Virgil Capital to attempt to buy Ethereum. But before it could do so, the bot would cancel its sell orders. and Virgil Capital ended up posting those buy orders that didn't get executed, briefly boosting the price of Ethereum on some exchanges. So what happened was, while Virgil Capital didn't even get to buy that Ethereum at a lower price, because when they saw sell orders, okay, that signals them buy the dip, they post those buy orders. Those orders didn't go through, and when they posted those buy orders and put them through, that caused the price of Ether to boost on some exchanges and let the bot profit, which is illegal. And the bot strategy was similar to spoofing, which is a practice in which traders enter fake orders only to cancel them, falsely signaling that there is more of a supply or more of a demand. And this is illegal. This was outlawed in the US stock and futures markets in 2010, not that long ago. And that's one example of these things that are rampant in the crypto industry that we're forced to deal with on a daily basis. Another example is bots make it easier to pump digital currencies, pump and dump. And we'll get to this Apollo pump and dump at the end of this video, but some people call it ping-ponging. I've never really heard of that. I've heard it more as wash trading. Illegal in regular markets. In the crypto market, it runs rampant. It lets users execute simultaneous buy and sell orders to themselves, creating a mirage of intense activity in a particular cryptocurrency. And this is illegal. Wash trading is illegal in stocks and futures. These are two examples. And this is a big reason why the Securities and Exchange Commission and CTFC are cracking down hard, or are looking to crack down hard on this sort of illegal trading. And while this illegal trading won't be here forever, for the next 2-3 years, maybe even 5 years, this is something we have to deal with. Those are two examples that the Wall Street Journal, they listed. Let me give you a more personal example. How does this affect you? And I want to share with you how I handle this illegal trading and bots controlling the crypto market. Let me cite this example and put it in my perspective. So it's time to buy that cryptocurrency that you've had your eyes on. You've done your research, the market price is low enough, and you've decided now is the right time to pull the trigger. So it's maybe at this time you go on the Binance exchange and you see that Bitcoin is trading at 3,579, and that's close to the price that you want to buy it at. So you head over to Binance, place your limit order just below the prevailing market price at the top of the buy side of the order book, and expecting a slight dip in the price, it allows you to hopefully fulfill your order quickly. So if the price is 3,579, maybe you'll set your buy order for 3,570. Maybe that's the price you've decided to buy Bitcoin. So you do it, you put your order in. Immediately after placing the order, you notice another buyer places a larger order with a marginally higher price, which nudges your order farther down the queue. So maybe your order was right here, but now more buyers come in and nudges your order down, elevating the risk that your order might not go through if the price never dips that low. What do? Well, you say, fair enough. There's other people buying Bitcoin. I guess that comes. So you do it again. You adjust your order to make it a little higher. And then again, another order goes through, nudging your buy order farther down. Before you know it, that attractive pricing opportunity you wanted to take advantage of has vanished. Why does this happen? Well, in a word, bots. And how does this affect me? It really doesn't, because this is more for a day trading or swing trading type mentality. For me, it doesn't really matter whether I buy Bitcoin at 3,579 or 3,570, because I take a long-term perspective on all these buys personally. But if you're a swing trader or a buy trader, it doesn't really matter if you buy it at $3 difference. But what this does happen, these bots just get richer and richer and richer. Manipulating the market, and then they can use that money to dump any time. So unlike traditional finance markets that normally close on evenings and weekends, crypto markets open 24/7, 24 hours a day, 7 days a week. This makes them ideal for automated trading. Humans sleep, bots don't. And now with dozens of exchanges, arbitrage, and wash trading opportunities, they're part of the market that we're invested in. That's something we have to deal with. If I have to give you an example that I see on a daily basis, and this really doesn't happen anymore. If we look at Bitcoin Diamond, which is just a random shitcoin with a Bitcoin name, ranked number 39. That's a mid-cap coin. That should be better than a lot of other coins out there, presumably. And while nothing's really happened in the last couple of weeks, if we zoom back to July, we can see blatant manipulation. Oh man. Let me turn Wi-Fi on. I want to show you blatant manipulation of Bitcoin Diamond. Let me see if this loads. There we go. There we go. Let's see. Did we get it? I think we're... Appreciate you guys sticking with me. Well, I guess not today, but just know when you see... I'll show you this with Apollo pretty soon. Apollo, when you see blatant, clear manipulation pumps, and nobody usually complains when a pump happens in your favor, and you see blatant dumps, it's either because of one or two things. Pump and dump groups that are humans that are, manipulating this action, or bots, which are way more efficient and make money off of you. Now, in my opinion, reasoning would have it that exchanges wouldn't want this. You would want your exchange to be known as an honest and a safe place to go. But the sad part is that exchanges are encouraging it. Bithumb, the second largest, South Korea's second largest cryptocurrency exchange, indirectly encourages this manipulation, as well as Bittrex. We just got news a couple months ago that Bittrex does the same. Why is that? Well, investors that manipulate the price obviously like it because they're able to generate profit off of people like you and me. And exchanges like Bithumb and Bittrex, they want that increased volume. Because if they get that increased fake daily trading volume, it encourages other real traders to come to their exchange and come to a place with presumably high volume and liquidity. I don't like that. I guess this is just something that you need to know is out there. This is happening all around this. How does this affect me? I just essentially have to admit that I'm not in control. I'm never going to know when the high highs or the low low comes. And it's just something you have to realize is happening as we invest and progress in this emerging space. Let me know how you deal with these things. And while we do that, let me get to the 3 news stories of the day. Why crypto is en route to the longest bear market in history. This just came out yesterday. And if you're getting any value from today's video, feel free to give it a like. Just helps the channel grow. But Ran Neuner, the host of CNBC's Crypto Trader, pointed out a very interesting statistic. He said, if the latest bear market lasts, if this current bear market lasts for another month, it's going to surpass the 420-day correction that the crypto market saw in 2014 to 2015. So right now on record, the 2014 bear market is the longest one we have ever had. That lasted over a year, 420 days. Right now, this bear market is on day 390. If it continues, the sideways trading or this lower trading continues for another month, then we're going to have the longest bear market that Bitcoin has ever experienced. Just something to put on your radar. Despite how long we've been in this bear market, Bitcoin has seen longer, and it has prevailed. We'll keep you updated on this channel. 2 more news stories to go. The Apollo team, this came off on Reddit as well, the Apollo team just engaged in a massive pump and dump scheme, dumping hundreds of millions of coins to their investors. Now, was it the actual team? To me, that's not clear. What is clear that this definitely happened, and somebody clearly manipulated the cryptocurrency, which is a whole lot easier to do on these lower cap coins. But from this Reddit post, he has compiled a list of reasons why it was the team. He's got some of the developers' wallet addresses. He fully admits that it's harder, because this is a privacy coin, it's harder to pinpoint exactly who holds these wallets. But he's gathered a lot of research here, and also play-by-play updates of things that are happening today involving crypto. This is just a theory right now, but when a cryptocurrency dumps 78%, that's a clear sign of manipulation. Just watch out. Prime example, team. That's why, here's the thing, cryptocurrency, it's speculative and risky if you're a high cap coin. If I see any red flags in a low-cap coin, I stay away. Let me know what you do. Last piece of news, and the news is pretty much the headline: the Ethereum Constantinople rollout will take place in February 2019. The hard fork that was pushed from January 16th is now going to be in February. What that means? It means the exact same things that it meant 2 weeks ago, that Ethereum is going to be optimized and updated. Either way, I'll keep you posted. All right, team. This has been Altcoin Daily. Let me know in the comments what you think, and I'll see you tomorrow.